I don't think they're going to clear the property market disaster, at least for not years and years and years. And part of that is because this isn't just chaos. This isn't just the economy unwinding. This is an intentional effort by the government to deleverage the property sector in a big way so that property will no longer be this powerful driving force for growth going forward because they're worried about the credit angle. They're worried about non-performing
Right.
loans. So they're not worried about growth. They're worried about having a more secure and stable
Right.
economy.
I used to be there twice a year, sometimes even three times a year. I had a damn plaque at the M Bar at the Mandarin Hotel in Hong Kong. Leland, that world is gone. In the new world, the one thing that stayed the same is their effort to come over to a consumer society. Have they even begun to make the shift toward a more Western market society from what we knew 20 years ago?
No, not even close. And they're actually on a treadmill walking backwards. And here's why. You can talk about shifting from investment to consumption, and they have been talking about shifting from investment to consumption. But investment has gone down, and consumption has not improved. It hasn't grown. The consumption incentives in society have not increased whatsoever. In fact, they've gone the other way because what you have to do in order to empower a consumer is to give consumers more spending power, to stop financially suppressing the consumer, financially suppressing households. The entire system is based around guiding advantages to the state to making sure that the consumer is not better off. And so they have actually haven't moved in any way in this one direction. It's been a marketing campaign for about 20 years now.
So, Leland, realistically, what can the government do here? I mean, we've seen the U.S. government and other Western governments, they can have a material impact on an economy through monetary policy, fiscal policy. What can the Chinese government effectively do there for the economy?
I'm going to say something that's going to surprise you guys and probably everyone else. They don't think they're doing that bad a job. And here's why I say this. They don't really care about the stock market. Wall Street cares about the stock market, so they write a lot of notes about how important the stock market is, but Xi Jinping doesn't care about the stock market. When you look at the economy, they used to prioritize high levels of growth. They're not doing that anymore. They're worried about national security priorities like, creating a chip ecosystem, domestic chip ecosystem, finding ways around the U.S. dollar payment system in the future. That's what keeps them up at night. They're not worried about high levels of growth. So the fact that their economy is slowing quite dramatically, that isn't a major problem. What they have to make sure they don't do is have too precipitous a sudden fall off in any of these areas of the economy that creates a doom loop of confidence that gets them into trouble. But significantly slowing growth, significantly slowing stock market, none of these things are priority ones for them anymore.
So, President Xi, is there any, to the extent that this economic, unease continues, is there any threat to him or his position in the government that could have, wider ramifications?
It's hard to imagine. So obviously there's a point at which so many things get so bad that there's probably is a danger line. But I think it's impossible to see that from outside the country. It's probably impossible to see that from 100 feet away. So yeah, of course that's in the distance, but it's very unlikely we see any of this affecting Xi Jinping. Like I said, the party thinks it's doing a good job. It thinks it's steering it towards a healthier course going forward, even though foreign investors aren't very happy right now.
One of your slides pervades the gloom that's out there. You use loan demand as an example. Away from what Paul and I know, away from Hong Kong, maybe 6 blocks of Beijing, maybe down the Bund in Shanghai, away from all that, is China distressed?
Yeah, I think that confidence was shattered under COVID zero. And it has never returned. So, last year we didn't see this there was never the big rally, and then there was never the catastrophic, collapse panic. That none of that was real in the middle of the year. But China's weakening, and firms don't want to invest, and they don't want to borrow, and they don't want to hire, and they don't want to do that because they don't like the future that they're seeing when they look down the road.
Okay, so John Taylor's out at Stanford dressed like a raisin. And he's saying, okay, this is what you do in a recession, a slowdown, et cetera. Did they have those tools available that America had in 1974 or 1981? Do they have the same tools we have?
They do, but there's some sort of dogmatic resistance against consumer side stimulus. They don't seem to want to do that.
Okay, so but come on, Leland, it's a totalitarian regime. They have to survive. I believe you lectured me that they have to keep people employed, right? So don't
Sure.
they lose the dogmatic at some point?
One would think, but this would be a pretty good time to lose the dogmatic right now. They just keep pumping more money into the supply side, try to, juice up more exports to get them out of
Exactly. Yeah.
the problem. It just doesn't work, but they haven't reversed course, at least not yet.